Hey everybody, Chuck Barone, Friday, March 17th, 2023. Thank God it's Friday. Let's wrap up a crazy, bananas, nutso, bizarro. I just can't even figure out the newest adjective to attach to what we're seeing here, guys. It's just crazy and keeps getting crazier every single minute. I was hoping that at the end of last year, because last year was just such a crummy year, man. Especially for us in the real estate industry here in Vegas, man. Just everything collapsing, inflation, the Fed, higher rates, and it was just a parade of negative, negative, negative. I was kind of hoping things were going to turn around this year. It looked like the Fed was kind of getting closer to moving that inflation number down where we wanted it. Now we got just a million complications, making things extra, extra hard. Fascinating stuff, man. But before we start the show, let me welcome everybody here. We really appreciate your guys' support, watching these videos, what you guys do for us every day. Thank you, thank you. Markets today. Well, crappy week, crappy month. Let's finish it off, right? Stock market down today. More bank woes, bank stuff really bad. It's going to really, like I was saying yesterday, if anybody believed that this is the end of it, and yay, these guys stepped in with billions of dollars and $30 billion to First Republic and $57 billion from the Swiss Central Bank to Credit Suisse. Everybody took a breath and sigh of relief yesterday, and today just more bad news. Stocks tanking. The Dow down 384, another crap week. S&P down 43, NASDAQ down 86. Tough times in the stock market, guys, and it's just a whipsaw effect where one day it looks like the sun is shining and here come the clouds again, and before you can even have a second to digest the previous day, the new day brings so much new crazy. You can't even focus. It's hard to gather yourself to try to learn something from yesterday's news because today's is smack in your face. It's crazy. Bond yields today. Well, this bond market, as crazy and nutty as the stock market is, bond market's even crazier. Yield today just basically going to the floor. The 10-year down 19 basis points. 3.39%. The 2-year down 30 basis points, 3.83%. 44 basis point inversion now, so it's really narrowed, right? The 2-year is down by over 1% since March 8th. What the heck? I mean, the bond market is not supposed to be behaving this way, guys. It's just the way the economic news is coming. Everybody jockeying for position. I told you guys yesterday about the short sellers just making Brazilians of dollars shorting these bank stocks, just killing it, man. And if they were still in this market today, they were killing it again because everything going down and leading these markets down, it was bank stocks leading the parade. The dollar today also down again, 103.90, breaking that 104, going under that. We'll see now if it's going to continue down or rally back up and get that 104 support. Didn't hold very well. Dollar not looking so great today. Metals, as a result of a tanking dollar, have a nice rally today, man. Gold up $56.40, $1,976.90, $2,000 an ounce gold any second, guys. Silver rallies 78 cents, $22.55. I'm seeing $25 silver too. I've been saying this for about a month now. Metals really, really want to rally. There's plenty of money to go into metals. They're just waiting for its opportunity. As this dollar, especially if it continues down, you're going to see $2,000 gold blam any minute now. Oil, well, funny, oil just continuing to go down another $2 per barrel today. West Texas Intermediate at $66.35. I saw natural gas is just still continuing to collapse. At the same time, here in Vegas, they want to raise our gas bills. I guess they're figuring it's still $9 a contract and not $2. crazy, man. These greedy ass corporations just, it never, never, never ends. We're watching this oil price tank down to $66 a barrel. See any reaction at your gas pumps? We're not here in Nevada. Just greedflation, not inflation. Corporations gouging, profiting from pain, soulless, just the worst, man. Bitcoin, monster day for Bitcoin, rallying $1,819, 26,786. Bitcoin rally, 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 man. This Bitcoin, and I freely admit, guys, I'm an old guy. I'm not really hip to the cryptos. I really have not. I know that this is probably not an investment that I'm going to want to make so much. So I haven't really taken the time to do a deep dive on it. But I know a lot of you guys out there watching this show are holders of Bitcoin and other cryptos. So I'm pulling for these for you guys. I want to see this rally. I think it's great. I think that if you've had some fears, and you were underwater in your crypto when it went down all the way to 16,000 not that long ago, and you might have a little too much exposure, because I know a lot of you guys are basically all in on this stuff. Maybe you want to take a little out here. Hold some cash. If the opportunity comes where it goes down to 16,000 again, history tends to repeat. You're going to see a big bounce. Might keep some powder dry to buy and average your costs down, or just however strategy. Be careful what you're doing, because nothing goes straight up or straight down, as we know. This rally, I don't know enough to know if it's just a knee jerk to stocks and bonds and everything else tanking so hard, and it's a place to park your money where the government can't get to it. You don't have exposure to failing banks and all kind of other stuff like that. But Bitcoin, a nice rally today. News you guys need now. There just wasn't a tremendous amount of news. We got some manufacturing data. Manufacturing actually going up, stopping the big reversal. It had been down 4 months in a row. Actually turning up last month, up 0.1% month over month. So at least now manufacturing's bottoming out. They look like that's depending on obviously the way the economy goes, which is subject to change moment to moment. Manufacturing may be making a bottom here. Also, we got the University of Michigan consumer sentiment, and that was not a happy report today. Shows consumers getting more and more negative, more and more skeptical about their own finances and the prospects for the United States economy. Everybody's feeling the pinch, guys. Everything's expensive. Even though they keep telling us we're making more money, wow, wages are really going up. I don't know about you guys, but I'm not really seeing my wages going up, especially here in real estate in Vegas. So I haven't shared in the new big wage gains. Hopefully I will soon. But consumers feeling pretty negative. The index coming in at 63.4, down from 67 last month. They were expecting it to come in with no change at 67 this month. So that big decline at the level it's at right now. Past form, now this is not an exact indicator, very much like the inverted yield curve, but the past results indicate that with a reading this low, we'll probably be looking at a minimum of 1% contraction in GDP for the year. Whoa! Uh-oh. So we know consumers are the bread and butter of our economy. If they're negative, they're going to not spend. Or if they are spending but not getting as much for their spending, well, that's where we are. More bad news on banks today, guys. It just keeps getting worse. I was watching these bank stocks get routed today, even with yesterday pumping in $90 billion just to two banks. It doesn't look like it's the end. It looks like it's just the beginning. You can't even say it's the beginning of the end. It's just the beginning. So if you hold in bank stocks, be very, very, very cautious, man. You're probably already sitting on massive losses. It's just the news we've been reading. So here's some of the stuff I saw that kind of pissed me off a little. Sorry. It looks like that executives at First Republic and Silicon Valley Bank did manage to sell millions and millions of dollars of their stock before the banks collapsed. Well, isn't that wonderful? I call that insider trading because they know what's happening. The public doesn't. They're selling to that stock to the unsuspecting public person who does not have that information, so to speak, right, or that inside information at least, non-public information. They gave bonuses. At First Republic, they gave bonuses the day the bank collapsed. Man, these guys and the levels of greed in this country we're seeing today, man, just bananas. At the same time, more banks threatening to go under, no stability anywhere. The Fed is going to have to continue to raise rates, which is going to further destabilize the collateral and assets these banks are holding. Pension funds who can't afford it are losing Brazilians of dollars as their holdings are tanking. This is just starting now a big downward spiral. Hopefully, we will not see a replay of 2008 and 2009 with banks completely freezing up, lending facilities drying up, no one can get loans, real estate market just completely craters, credit cards, any type of consumer credit, tough to get. Here's what's coming, man. Next week, we get the Federal Reserve, we get jobs, we get a lot of important data. You know we're going to be here to bring it to you. I've been saying I still believe the Fed is going to raise rates next week, even in spite of all this negative news on the economy. I believe they're going to raise a quarter. I think, truthfully, with the if it was inflation only that they had to consider, if I'm a Fed governor, I'm probably arguing for a half-point increase. But they got to kind of, now they don't want to spook these markets, I'm guessing, worse than they already are. So I anticipate a quarter point. That'll get the overnight rate up to 4.85%. I think that the Fed doesn't really have any choice, guys. They're just in a very, very tough position. And I don't envy them or feel bad for them. They asked for this job. They created these conditions in a lot of cases, them and their friends in Washington. So we all get to watch it, suffer it. But like I said, man, be of good cheer. We know we're living through history. And if you've been doing the things we've been advising since the show first came on the very first day, if you're going to be in the stock market, invest defensively, right? So preferred stocks, consumer staples, utilities, dividend-paying stocks, medical, defense, that kind of stuff. If you've been listening to us there, you're not getting creamed in this market like a lot of people are. Well, what else did we say? If you have debt, try to lower it. Even if it's $10, $20 a month on your credit card extra, do it. Pay it down. If you've been listening to that, because we also been added on the caveat at the end, not only should you pay down any existing debt you have, but you should do everything in your power not to take on any new debt. So if you've been following the first three there, investing defensively, paying down your existing debt, and not taking any new debt, you're already miles ahead of the game. But our consistent mantra of saving out of every check, saving out of every piece of income you get, your goal is 10%. Hard to get there if you can't save 5, if you can't save 2, if you can't save 1. Okay, save something out of every check. Learn to live within your means. Learn to create surplus for yourself, man. There's two sides, right? There's how much you earn, and you have some ability to affect that, right? You can affect how much you earn. But working hard isn't the only thing, man. It's also the other side of the coin, controlling what you spend. My mentor, the genius of geniuses, the smartest guy I ever knew about money, used to just continually harp on me endlessly. It's not how much you earn, it's how much you owe. It's not how much you earn, it's how much you owe. And the way the world's working, guys, as we've been saying again, over and over, repeatedly ad nauseum, they want to create debt slaves out of us. They want to create debt isn't even the right word. They want to create payment slaves. Where every penny you make, you get paid on Friday, and it's just a series of payments, you're broke. Monday comes, you're broke. Get paid again, series of payments to be made, a lot of them automatically deducted from your account, right? Boom, you're broke again on Monday. And this is the cycle they want people in. And now half the people making $100K a year are in this debt cycle, living paycheck to paycheck, can't get out of debt, can't pay down any additional, adding on new debt, much to their own detriment. Guys, don't do it, man. Don't do it. Save a couple of pennies, invest defensively, no new debt, pay down your existing debt, even if it's the smallest, most embarrassing amount. Add a little extra, pay it down faster. And of course, the last thing we've been telling you guys is if you have to spend money, there's nothing wrong with that. We all need things, we gotta buy things to live and survive and have a life, right? But spend your money thoughtfully, guys. Buy the things you need to buy. Be careful of impulse stuff, because that's how the stores make their big profits, is the impulse buys. You're checking out, there's this shiny object at the checkout stand, or this one thing you decide you just got to have it, the last minute add-ons. Try to avoid those. Try to be thoughtful about how you're spending your money. The geniuses tell me all the time, if you're going to spend more than $500, don't do it that day. Go home, sleep on it. If you still want to go spend that money the next day, after you slept on it, go do it. But you'll be surprised at how many times it'll stop you from spending that money you don't need to spend. Anyway, guys, that's it for Friday. Happy St. Patrick's Day. Sorry I got no green on. I'm not exactly Irish here. But all my Irish friends are having a great time today. All my friends are having a great time today. If you can't wear green, drink a green beer. Do your duty. It's St. Patrick's Day, weekend, Friday, all the good stuff. NCAA tournament going on, man. A lot of fun activities this weekend. I got a birthday party from one of my kids. It's a big time. Enjoy the weekend. Let's get away from this crazy for a few days. We'll be back on Monday. We'll set the week up for you guys. Hit me up in the questions or in the comments if you have any questions. Don't forget about AskChuckBarone@gmail.com. We appreciate your likes and shares. Have a great, super nice, awesome, fun weekend. And we'll be back again on Monday. Till then, guys, take care. Thanks.